You're welcome back. And the Ghana Statistical Service has announced the new inflation rate for the month of June. According to the government statistician, Dr. Philomena Nyako, June inflation dropped from 18.9% to 18.4%.
The locally produced items, the inflation rate dropped from 18.5%. The imported items, the inflation rate dropped from 18.5% to 17.1%. And if you look at the commodities also, if you look at the koi groups, we saw that food inflation rose just slightly. So you can even ignore that because it's more or less stable. 8.5 and 8.6, the difference is very minor, is very small. But the change is rather coming from the non-food group, which dropped from 25 to 24.1. But we are talking about non-food inflation rate going down, and we've talked about the fact that imported items, the rate in the inflation rate of imported items went down. Okay, we have seen the stability in the city. That is one reason for what we are seeing now.
Now, on that particular story where we're having the numbers of inflation go down, we do have Dr. Osiesibe on the line to help us put in perspective what exactly these numbers mean to the average Ghanaian, your business and my business as well. Doc, you're welcome to the marketplace.
Thank you.
Exactly. We're seeing inflation drop marginally, though, to some levels, especially as we get towards election. What does it mean to the average Ghanaian here?
Well, it means quite a lot, though not so much, because once you have prices falling, it means that the purchasing power of average Ghanaian would have increased. It means that the given city can now buy more goods and services than it used to be. But then one would say that the difference is just too marginal that would have any significant impact on people's purchasing power, because just from about, it's just some percentage points, and therefore I do not think that it will have any massive impact on the people's purchasing power.
But Doc, is it not also significant to also notice the trend over the period? Because a lot of pundits, a lot of analysts and economists are also projecting, as we're getting closer to elections, that government is going to spend a lot more money as we get closer to election, and therefore inflation numbers are supposed to actually be coming down. And now we are having the opposite direction of inflation. So I think it must be something significant, yeah.
It's quite positive, largely due to the fact that the exchange rate has stabilized over a period of time. And also last year, we did not have any significant adjustment of utility bills as against the previous month, the last month. And so we do not expect inflation to go up in that regard. And also looking at the fact that government is seriously pursuing fiscal consolidation as well as monetary policy tightening by the central bank, I would really have expected inflation to fall more than it has been, because you realize the monetary policy rate has consistently been adjusted upward, but the rate at which prices respond has been very sluggish, and therefore, if you look at the target that have been set for the year, it still looks quite bleak whether we will be able to achieve that target, because the pace is too slow for my liking.
Okay, let's do some detailed work here by going to the nitty-gritty of it and those determinants of this particular drop in the inflation numbers. Now, according to the government statistician, the year-on-year food inflation rate for June 2016 was 8.6% compared with 8.5% recorded in May. So we saw some slight improvement in the food inflation in there. Is that also not significant because that consumes a chunk of the money of a lot of Ghanaians here in Ghana? And also last month, or the May inflation, we did see Greater Accra recording the highest of inflation in terms of even leisure went up. Now we are seeing some decline of these numbers. I think it's something that we should be celebrating if in the event is going to continue, isn't it?
Well, we should, but not so much of that, because, like I said, if you compare the food inflation to last year, end of year inflation, it was 8%, and now it's about 8.5%.
Yes.
It appears it's still increasing. It hasn't really come down, and that is
no. But if you look at the month-on-month between March and April, May, I think we're seeing some declining in the increment, probably.
Yeah, that was month-on-month.
Exactly.
But if you look at the trends also, just the trends over the first half of the year, you could also see an increase from the end of December, which was 8%, and now to about 8.4%. And therefore, we don't have to. Of course, it's a positive development, but I think the economy could have achieved more, or could achieve more than it's actually performing if we actually was able to increase production, agricultural production, and the manufacturing and other key sectors of the economy. If those sectors had increased, I think that it would have performed much better than we are seeing, looking at the fact that we are now in a fiscal consolidation period where we expect inflation to move to about 13.5%.
Okay, Doc, finally, you're saying that it could have done better than it's actually doing now. In your opinion, what do you think the managers of the economy should do so we can get to the right track to see some better numbers?
I think we have to begin to focus on the real sector of the economy. Currently, as it stands, the business environment is not too conducive. What is happening in the energy sector is actually stifling production, both in the manufacturing and agricultural sector. The high interest rates, the constant monetary policy upward adjustments, all of them seem to be working against the real sector. So the production base of the economy is still very weak, and therefore, although we are pursuing very stringent monetary and fiscal policy, inflation doesn't come down as we expected because we are not producing more, and therefore the cost push inflation or the supply side inflation is very high, which seems to be negating whatever fiscal consolidation that we are having. And so I think it's a high time that we begin to pursue policies that will reduce the bottlenecks and the rigidities in our supply system and free up resources, particularly with regard to bank financing, to the private sector to be able to grow the economy, which is very important as far as inflation is concerned.
All right. We thank you very much, Dr. Osesibe, for your time here on the Marketplace. Now, moving on here on the Marketplace, despite the challenging times the banking sector is going through, some banks in the country are expanding and developing innovative products and services, as well as embarking on processes to excite their customers. This is according to the Managing Director of Societe Generale Ghana, Sionle Yeo, said demand banks to invest in top security systems to meet the ever-expanding demand of the modern customer. Speaking with Joy Business on the heels of recent successful hacking of some banks by fraudsters, Mr. Yeo said the situation has cost some banks millions of dollars in respect of customer deposits and investments.
Security at Societe Generale as an international bank is very key, of course, and we have very skilled staff at our headquarters, in Paris, in New York, all around the world, working on securing our IT platforms, because we are using global IT platforms all around the world. And, when we were presenting our cash management offer, we insisted on how it is secured from the end user perspective, with the token that was presented that allows the customer to customize the usage of a product within his own organization, ensuring that he will have defined the levels of authorizations, the levels of validations that suits the best his organization, and ensuring that when you want to initiate a transaction, you are required to ask for generation of a unique password, a password that is valid only for this transaction. And then if you come back to initiate another transaction, you have to regenerate a new password. This is the first level of security, but of course it will make it impossible for, let's say, a normal. It will make it impossible for, let's say, normal and simple fraudsters. Will make it difficult to fraud into our system, just because or thanks to this first level of security. But of course, if you have to deal with hackers, you have to deal with specialists and very knowledgeable in IT. This will not prevent them from accessing your IT system.
Now, players in the banking industry have been advised to speedily adopt technology to reduce pressure and improve customer service delivery in their operations. Speaking to Joy Business at the launch of Standard Chartered Bank's new mobile app, SC Mobile, head of retail banking Henry Bates indicated that the future of banking sector would be driven by technology, hence the need to explore it now.
Technology and digitization is totally inseparable from banking now. You can't talk about banking without technology. And there are just two things we need to do. The speed with which we adopt technology, because the speed with which we adopt technology will totally change our lives. And we'd like to encourage everybody to come on that technology journey. Banking will be driven going forward by technology because that is what our clients and our customers are asking for. Mobile money and every other form of money is part of the ecosystem of money. I think what we're doing, which a lot of people don't know, is that as financial institutions, we're working with mobile companies to ensure that it is one ecosystem. And you're going to see from some of the things that we're going to roll out very soon on this platform that we're launched, that it's a totally seamless world. Mobile money is not going to sit somewhere and a bank is not going to sit anywhere. You would see that on one platform, all of these become one seamless process.
Now, agribusiness in Ghana is still artisanal with little growth or development over the years. Statistics show that agribusinesses in the country constitute less than 1% of the economy. This is despite efforts at the past decade to institute policies and projects to improve their situation for maximum economic benefit. CEO and founder of food processing and packaging firm Home Foods, Felicia Chumesi, blames the slow growth on what she says is the lack of appreciation of the sector's economic potential.
It's a way we see agribusiness. It's not even agribusiness, it's the way we see agriculture. Agriculture is meant to be run by people who never were very educated. So they don't turn it to a business. And we've been so blessed by our creator that every time there's food. Mm-hmm. You know, my son will not take fufu flour. You know, because he knows that there's somebody who pound. My dog, if you don't pound fufu, she will not eat. If you give the flour, she will not eat. I'm the only person who eats in the processed root tubers for fufu. It's the way we are. It's always available. And the market women will sell, there's not even storage for them. And so people don't see money in there. It's the multinationals who saw money. Because if you see what Malaysia has done with palm oil, and Malaysia worked so hard on palm oil, not by them, but by the Dutch. They've done so much. Interestingly, the first time I was there, and then they showed me the red palm oil. They said, oh, you are from Ghana, we don't even need you to show it to you. They didn't even know palm oil is edible, the red one. I was surprised. The Malaysians don't eat red palm oil. They fractionate, do so many things to it. Use all oils and chocolate and milk are from palm oil. You know? And so it has been done in such a different way. But we don't see, it's lack of knowledge.
The CEO and founder of Home Foods, Felicia Chumisi, was speaking ahead of the Joy Business Busy talk on agribusiness scheduled for next Tuesday, July 19 at 5 p.m. at the Alisa Hotel here in Accra. The talks is under the theme Transforming Ghana Agribusiness to the Rescue. Meanwhile, in today's edition of the Joy Business Fund, the CEO and founder of Home Foods, Felicia Chumisi, whose firm was recently awarded the Premium Food Product of the Year at the African Brands Leadership Merit Award in Nigeria, will be sharing her story. Here's a preview of tonight's show on Business Live.
At the age of 8, I was in charge of the storehouse. I became very independent very early, and the sisters saw in me my competence. And you give me instructions, I'll follow it by letter. And when school reopens, your friends don't turn up, and you ask why daddy died and mommy cannot take care of them. Why not mommy? Mommy is not working. So at that very tender age, just when I told myself I'm going to be independent.
In 1995, on her kitchen table, Felicia decided to set up a food processing and packaging company. Home Foods was born.
With food, whether you are poor or rich, you have to eat. And so I chose food. And I told myself, what do we use in the kitchen every day? And I realized the dynamics of food. Tomatoes you use every day, especially in our society. You use onions every day. You use oil every day. And so I chose that, and I said, no, let me choose oil. So I chose palm oil. Palm oil is very common. You can always, it's available. And on our market, that's when I chose palm oil.
And she certainly didn't get the option wrong. But what would change the future of Home Foods would be a dream she had.
So that's what to expect on Business Live this evening. So you should be expecting more from that. Tell the whole story will be told there on Business Live. Now, we're taking a short break. Marketplace returns after this break. You're welcome back, and now time to go across the continent and also look at how your investments are faring here in Ghana. So for those investors and investment bankers, if you want to really diversify your portfolio, either domestically or do some trans-border investment, this is your platform. Now we're starting from Johannesburg in South Africa, where the FTSE JSE All-Share Index recording almost about 123.87 in terms of appreciation, but the year-on-year is still declining as it stands currently at negative 0.89% per annum. So South Africa not returning some impressive performance in there, but I think I always say this is also the time to get into the market and buy, because you can buy low and sell high, and that's where you make your money. Now, in Nigeria, the largest and the biggest economy here in Africa, also recorded some marginal decline in their volumes traded on the exchange, as it recorded negative 40.40, as the year-on-year still remains 0.60 in the positive regions. And Egypt EGX 30 index as a benchmark marginally declined by 11.29, but still remains the topmost in terms of returns to its investors' capital, as it returns 7.14% year-on-year to its investors. And followed by Morocco, that's the Moroccan All-Share Index, also declined marginally by 36.54, but still recording an appreciable level of returns of about 7.38% per annum. Now let's go to Nairobi in Kenya and look at how the Nairobi All-Share Index also is performing, as it declined by 0.82, but retaining negative 3.87% per annum for their investor. Now moving on here on the marketplace, as far as the African market is concerned, now let's look at the Tune Index, which is based in Tunisia, also recording negative 43.31%, but returning 6.91 in positive to its investors' capital. And here in Ghana, we're not that fortunate, because the Ghana Stock Exchange is not doing that well, as it's struggling to recover itself. yesterday recorded some decline of 10.38 and a year-on-year performance of negative 10.38. So it is one of the, or it's still the top 5, or it makes the top 5 of the equities in Africa, which is actually declining investors' capital. That is an emphatic statement to the fact that it is very cheap here in Ghana to buy shares. So investors out there should also take note of it. Now look at the Francophone regions where the BRVM, that's the Bourse Regional Development Mobilier, recorded some declines of about 3.73 as the year-on-year remains 2.96%. Now finally, to the Semidex of Mauritius, which also declined by 2.11 as against negative 2.98% year-on-year in terms of that performance. Now in Ghana here, we're looking at how it did impact on the African market at a total volume of 145,998, a value of 316,686 Ghana cedis, and that affected significantly the total market capitalization of the Ghana Stock Exchange to move to 54,758.56 million Ghana cedis. That's quite a decline there, and I think the managers of the economy and the exchange should be doing something about it. Make sure the market is quite attractive so it can attract a lot more investors and other foreign direct investment to the country. Now, that brought the financial index, which measures the performance of the financial equities like the Standard Chartered Bank, the UT Banks and the like on the Ghana Stock Exchange to almost about 13.20 in the negative. So that's doing badly than the total market performance. Now, we have the movers of the market, including Aluex, EGL, that's Ecobank Ghana Limited, and of course Ecobank Transnational Incorporated, like mother, like daughter here, and then GGBL, or Aluex gaining 2 pesos to be close around 13 pesos per share. EGL lost 1, ETI lost 1, and of course GGBL losing 2 respectively in there. Now, Nigeria's top 5 included Wando, Vanler, Red Strax, MPFA Bank, and of course Continsure, all gaining some money for their investors there in Nigeria. Now we're looking at the top 5 losers on the Nigerian market, which includes FCMB, the Transcorp, NEM Insurance, Livestock, and Transport, all losing some money there to their investors. The Nigerian market gradually recovering, but not as we all expecting. So we need a lot more economic interventions to rescue, especially the currency situation there in Nigeria. Now, at the international front, crude oil is currently trading around $47.71 per barrel, as gold losing $6.46 to be trading currently at $1,347.88 per ounce, and cocoa gained 12 to be trading currently around $3,113 per ton. Now, we're looking at the Ghana cedi and how it's actually performing against the top 5 major trading currencies. Against the US dollar, it did actually depreciate. It depreciated against the British pound, depreciated against the euro, lost against the Chinese yuan, but gained against the CFA franc. So the CFA franc doing quite well against the cedi, or the cedi doing well against that particular currency, but it's not been that stable over the period. So let's see how the cedi do that as and when we move on throughout the week, or how the cedi would end against the CFA franc. So that will be it here on the market for the investors out there. That is how it is that we're going to end the program here today on the marketplace. My name is John Kojo Amuaku. For your feedback and others, you can actually keep interactive with us. On Twitter, it is Joy Business GH, and on Facebook, it is Joy Business. For more, you can log on to myjoyonline.com/business. Have a very wonderful afternoon.